Are you seeing what gold's doing today? What's driving it? Where will it be when I get this posted? I think we have a few more questions than we have answers, but we're going to give it a shot. Gold's been stuck below $1,950, $1,950 since June 19th, so just over 4 weeks now. The CME FedWatch tool right now it gives a 97.3% chance that we're going to see a rate hike at the July 26th Fed meeting next week. It means traders are expecting another hike. They're actually pricing that in. Earnings reports are out. They're actually better than expected. Even some big banks, and they're beating estimates. Nothing in the news cycle about banks collapsing, at least not from credible sources. And the Dow is up for the 7th day in a row. On top of all of that, we're in the midst of a seasonally slow time for metals in general. So what's going on with today's gold rally? Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. It's sdbullion.com/new. So I don't typically comment on live prices. I know enough by now to realize that a quick trend typically tends to normalize. If we see a quick sell-off, well, buyers are there to grab the discount. If we see a quick run-up, well, sellers are there to take some profit. But after 4 weeks of downward price movement and all the typical indicators suggesting that we're going to see more of the same, today's rally has to make you wonder what's driving it. So if we do see that pullback by the time this goes live, and we're talking past tense at that point, well, the price jumped from 1960 to 1983 over the course of about an hour. And that's a significant move. Now, if that happened over months, not such a big deal. It's 1% over an hour. It is. I'm sure somebody out there is going to say gold skyrocketed today. If we want a convenient explanation of what's happening, well, the 10-year Treasury yields, they fell about 4.3 basis points today. That's always something of a factor. And if you were to go out looking for reasons for the micro rally, that's probably the only readily available data that seems to line up. I saw earlier somebody mentioning that the Dixie was down, but since that time, it's actually bounced up and it's positive today. If we were to get off the charts, projections, actual macroeconomic data reporting that came out today, get off the typical analyst coverage entirely, there's the question of what might be happening with BRICS nations, and specifically what might be happening with gold's possible role in that common currency that we've heard about, the one that's meant to challenge the dollar now. I have already mentioned that the announcement that we've been hearing about didn't actually happen, but that doesn't mean that we're not going to hear about some kind of intent to create something similar at the August BRICS Summit. Nobody knows. What we do know is that gold has been in the news, in the public's attention, a lot more than it was a few years ago. And despite a lot of indicators that really shouldn't be good for gold, it's still performing very well. At the beginning of the year, most analysts, they were projecting big moves for gold, but that was all dependent on the Fed pausing rate hikes for Treasury yields to fall. And none of that has happened, at least not yet. We're actually hearing that we could see 2 more rate hikes this year. And here we are, gold prices up 8.6, 8.7% already for the year. So what does this mean for non-traders? Well, to me, it just means gold, it's going to continue to be strong for the foreseeable future. And I'm no analyst, but I'm expecting that when we hit that Fed pause, we hit that pivot, it's going to give gold a big push. And because of that, I'm continuing to buy at current prices. Buying a little bit more patiently. I wait for those monthly dips, and we've been finding them. I can't really see any reason to slow down further than I have, though. Also, I'm not racing those crazy predictions from crazy people about gold exploding in June because, whoops, they missed that one. But maybe gold's going to explode in July. I've been hearing that. Or gold's going to explode in August at that summit, etc. It just is getting further and further away from reality. So I'm ignoring all that. I'm just accumulating for the long run. The fact that we're seeing today's rally, though, shows that gold isn't just lost at sea, no wind in the sails. It tells me that there's still day-to-day interest. It tells me that we're still able to save a little bit if we watch for those dips. Now, at the end of the day, a $20 swing, it's not a big deal on a $2,000 purchase, but 2 weeks ago, it was $80 less, and 2 months ago, it was $100 more. So paying attention can save you some money along the way. Now, the other thing that I'll just say offhand is that less retail gold and silver demand this summer has been driving premiums down. It's just an offhand anecdotal observation, and it happens more with some products than others. I'll just say it, especially silver. But my last two 1-ounce American Gold Eagles were at a 6% premium, both with spot around $1,900. So even though I've been pretty patient with my buying, all things considered, it's been a pretty good time to be doing it. I've said this before, but buying when gold or silver seem boring is really the best time to get it. So let's call it good there. Let us know what you're up to, if you're trying to get ahead of some kind of future price run, buying on the low, or if you're slow and steady, waiting to see what happens. Let us know. And then while you're in the comments, be sure to hit that like button. It's a big help to the channel. YouTube doesn't always agree that this is the kind of content it wants to push out, so anything helps. And if you want to see more on the topic, be sure you're subscribed. Be sure you have that notification turned on. And if you're still here, thanks again for watching. I always appreciate your time. Take care.